Hello, everyone. Welcome to the market update for Tuesday, December the 15th. Just a quick announcement. I haven't made the change yet, but I realized that next week, Thursday, is Christmas Eve. I'm sure that a lot of people, if you're celebrating Christmas, have a lot going on that day. I know I do. So I'm actually going to change for the next 2 weeks. I'm going to be changing the class schedule from Tuesdays and Thursdays to Monday and Wednesday. We'll do that next week, and then the week after. Like I said, I'll make the change on the calendar on the website there after class, and that way we're not trying to do a class on Christmas Eve and New Year's Eve when I know a lot of people are busy and probably rather spend time with their families. So, all right, let's get started with the market update for today. Obviously, the markets are up. They've been kind of back and forth. We've seen kind of some mixed markets taking place again, where some of the indexes are up, some are down. Yesterday, all the other indexes were down, but the Nasdaq was up. And so when that happens again, usually what's going on is there's just money moving around the system. Now, it usually isn't a very bullish sign when that happens. Doesn't mean the market can't continue to go up, but it's not healthy when that happens, because again, there's not a lot of new money that's going in and fueling the market going up. There's just money moving around. It's money coming out of Coca-Cola and going into IBM, and then out of IBM the next day and going into Apple or something. It's just kind of rotating around. And that's why it seems like we've just kind of been going nowhere. We've been kind of flat. We're up a couple of days or down a couple of days. And although overall we could still be trending up or trending down, it's just a sign of the market starting to get a little bit tired, or just taking a breather, taking a pause. If you remember, November was a tremendous month where we were flying, kept moving higher almost every day. And markets can't do that forever. So, sometimes you'll get a sell-off or people take profits. But when you have a very strong market, a very bullish market, which we are in right now, a lot of people are wanting to buy. Not too many people are wanting to short this market. But when you're in that condition, then anytime you get a sell-off, it's a pullback, and people want to buy pullbacks. And so these pullbacks aren't lasting very long, but then they're also not, they're recognizing the market has stretched a little bit. And so when the market does go higher, then they start selling, or they start or they don't buy. And remember, not buying is going to cause the market to go down as well, because those prices have to come down till they find sellers or attract buyers. And so, if you're not, it takes buying just to hold the market up. So let's take a look at the internals here on the direction alerts. With the selling we saw the last few days, we've seen the indicators pull back even further. Momentum indicators now in the hold range there. And as we're going to see, as we look at the individual charts, we are kind of in a critical area here. Whether we're going to move back, start a new uptrend and move back up into the extreme bullish area, or are we going to start moving into the kind of the sell area there? I'll show you that when we look at the individual charts here. We're kind of in that critical area right now. The breadth indicator is off the extreme. We're in the high range still, but we're off the extreme. And then sentiment, same thing. We're still in an area of complacency, but off the we never really got into the extreme area on the sentiment indicator, but we're off the right side of the high box that we were in last week. So we also look at the buy-sell ratios. We're still wide, but we've been moving lower. There's been, on those sell days, more of those buys are going back to holds. Not a lot of holds are going down to sells. That's why the sell is just kind of been flat. but we are still a little wide. I mean, we're kind of back down into this range right here, which has been is usually the normal extreme range. We became really extreme on the buy-sell ratios there. If we get a big, but I imagine a lot of these have moved, though, very close to going back to hold. So I imagine if we did get another sell-off here, we'd see a pretty dramatic move here with the buys dipping down, and we'd probably see a lot more of this stocks going from hold to sell, and we'd start seeing this move up dramatically. I think we're kind of at that critical inflection point where we'd start to see a bigger move on this if we get another move down. Sentiment indicator is off the extreme. Not really, it's definitely not in an extreme bearish area. We're nowhere near down these levels down here off the extreme highs. So definitely the market has room to go either way. It has room to drop dramatically if that takes place. It could also have room to have a pretty significant rally if we want to rally into the end of the year. Historically, this time of the year tends to be more bullish. People always talk about Santa Claus rallies and things like that. I don't get me started with Santa Claus rallies because I've been doing this a long time, and everyone's definition of a Santa Claus rally is different. Some people say it starts before Thanksgiving and runs the first few weeks of December. Others say it's the week from Christmas to New Year's. So many people have different definitions of it that basically what it's come down to is any rally in December is going to be a Santa Claus rally. Well, you can go back pretty much as far back as you want to go back, and there's always been a week or so where we've had a rally in December, and so you could come out and say that there's a Santa Claus rally every year. Well, yeah, but that doesn't help me. When does it take place? But generally, the month of December tends to be one of the more bullish months overall. Now, I'm never going to trade that alone, but it's one of those things historically that if you see a bullish trend and you see bullish patterns and you're in a historically bullish month, well, it's one of those probabilities that would lead me to believe that that particular trade could work out because of so many of those different probabilities lining up for that move. So we can use sentiment, we can use history, but never base a trade exclusively on that. I know people that sometimes will just go buy in the month of December because they hear it tends to be a bullish month. Hey, there's been some crashes in December. We had one a couple of years ago. It was a pretty ugly, one of the worst crashes I've seen in a December. So if you're buying just based off of that logic, it's not a very sound investment strategy. All right, let's look at the individual charts here. By the way, the training that we're going to go over, and those of you that are new, we do the market update on Tuesday. We do the stock-specific class on Thursday, and I spend the first half hour going over the basic stuff we go over every week and look at to get an idea of what the market's looking like. The second half hour is going to be a training, and we cover different topics. The last couple of updates, we've talked about learning how to read a trend, the stair-step movement of a trend. We've learned about impulsive and corrective moves. Last week, we learned about Fibonacci retracements, how to use the Fibonacci retracement tool. You can go back and review those classes if you want to learn some of that material. Today, we're going to cover candlesticks. What are candlesticks? You'll hear me refer to candlesticks quite a bit. I love this type of chart. We're going to learn how to read those today. But I do the training in the second half. That way, if it's too basic for you, if it's stuff you already know, you don't have to wait around for the training to be over to get the market info that you were wanting in the first place. So those that want to stick around after we do the market update, I'll go right into the training on candlesticks today. Let's go over the overall market here and take a look at you can see that the uptrend is still intact. We had a kind of a bearish reversal day yesterday where we gapped up. We opened up here, and I don't like big gap ups on a Monday are usually not good, especially if they fade into the close. A lot of times, again, it's not every time, but a lot of times you'll find that if you have a big gap up on a Monday morning and it fades into the close, that you tend to have a bearish week, meaning by the end of the week, you tend to be lower that week. And so that wasn't a great sign. One thing I will point out, though, with a lot of momentum and kind of historical moves that take place, meaning often I'll make comments, well, just like I did with the Santa Claus, right? December tends to be a bullish month. One thing I can point out is that this year, I don't have to tell anyone about this, but this year is a weird year. And this year has been a weird market year. And bearish reversal formations that have worked like clockwork over the years haven't worked as well this year. We have an extremely bullish market right now. And so, I'll teach you some of these, especially today when we get into candlesticks. I'll teach you some of these momentum type moves that you can learn to read. But just be aware that right now it's kind of a weird market situation, and some of them may not work as well as they normally do. So the problem with that is that, especially if you're just learning some of this for the first time, is that you can come in looking at particularly bearish reversals, learn some of these bearish reversals, and none of them seem to work, and you can develop an opinion that they just don't work. And then when the market does change and does become more bullish and acts in a more normal way, you might hold on to those beliefs and miss some of the clues that could tell you markets are selling off. So it's just the reality, though, of what we're dealing with. But that was a pretty bearish reversal yesterday. But you can see today we're right back up to moving higher. We gapped up at the open, and we're looking like we could close higher than where we opened, and it could be that we just kind of keep going. By saying we're in a critical area, though, that was a pretty bearish reversal yesterday, and we're kind of in the middle of the price movement from yesterday. If you look at the extreme high that we reached yesterday up here, and the extreme low where we closed yesterday, although we're up today, we're still kind of in this range right here. So we're not out of the woods yet, as far as the market going higher or going lower. If we were to drop down and if we move down, we're probably not going to do it today, but if we move down below Monday's low in the next day or two, that's going to be very bearish. It probably means that the market is going into another correction. I'm not saying it's going to fall apart. It could be something like it did back here, where it pulls back for a week or two and then starts a nice rally that we saw at the end of November there, where it just started to move up in a strong fashion. As far up as we've already come, we're probably due for a little bit of a pullback. But like we did today, where we reversed right back into a bullish move today, if we break out above the upper part of yesterday's move, which we're pretty close to doing that, then the market probably will continue to go to new all-time highs, and at least for a few more days, where it could continue to move higher. If we look at the Dow is even more distinctly within the price action from yesterday. And we're going to learn about these. These are candlestick formations right here. We're going to learn about these today. And if you learn how to read what's going on, you can really learn to read momentum. And that's really what we're looking at when we look at candlesticks. But if you look at the Dow here, you can see what I'm talking about, where we're moving higher, but it's just sloshing higher. It's stagnant. You see, we're moving kind of choppy and sideways, but we are trending still higher. but this is a sign that the market is a little tired. And again, it could become invigorated again and take off, or it could pull back until it relieves some of that overbought condition there. But that's kind of what we've been in. Just haven't really gone anywhere for the last couple of weeks. The Nasdaq has been driving the market for most of the move. It's higher today, and it has cleared yesterday's move. And remember, the Nasdaq was the only index that was up yesterday. All the other indexes were down, and so really, most of the time we look at usually the first chart I'm going to look at to get an idea of how I expect the market to move is I'll look at the S&P 500. That's what most people do. It's the most general index to really account for the majority of the different companies out there, different sectors out there. But lately, over the last few years, because tech has really been driving everything that goes on, I usually will go to the QQQ first thing in the morning when I pull up everything and look at the QQQ chart. Because if there's a rally going on and tech isn't participating, I don't usually trust the rally, and usually I'm right. Usually that rally will fizzle. If the rally is based on Coca-Cola and Procter and Gamble going higher, it's probably, at least recently again, it's probably not going to be lasting very long. If the tech is leading the way, if the tech is up and is doing well, then usually you're fine. And that's why yesterday, even though all the other indexes were down, the Nasdaq was still closing higher. I felt like, even though that was a bearish reversal day on most of the other indexes, the QQQ was telling me that it may still be fine, that the rally still might be intact, and so far today the QQQ is higher again. Now, momentum-wise, it's not performing great as of right now, and we'll talk about that when we get into reading those candlestick formations. And so it could mean that we're still kind of in that critical area there. In fact, with the QQQ, I'd probably take a look at this high right up here, this low down here, and say those are my critical spots. If we break out above here, that's going to be very bullish. If we break down below here, we're probably in for a much bigger pullback. All right, let's go through some of the other, or here's the Russell 2000. Russell 2000 is just recently been really on a tear. It's been outperforming even the NASDAQ. And these are the small caps. We look at the Russell 2000. We usually talk about the small caps, smaller companies. Now, there's two indexes that are said to be leading indicators of the market. And again, this has been historically over the years, small caps, usually they tend to show that the trend of the market could be reversing. They tend to show it first, meaning if they're outperforming the other indexes, it usually means that you're in a pretty strong uptrend. When they start falling apart, if we start seeing the small caps selling off, but the rest of the market is still going higher, that could be a warning sign that a pullback is about to come. Now, when I say leading indicator, nothing can tell you exactly what a market's going to do or what a stock's going to do. But this is one of those that has a tendency to show you warning signs ahead of time. And again, they don't always play out. I've seen small caps start underperforming, and it doesn't, you never get that big market sell-off. But if you see small caps starting to drop, but the rest of the indexes are still going up, and then you start seeing other warning signs out there, the VIX starts spiking up and things like that, you can start piecing those clues together and saying, boy, this is maybe a time to tighten up stops, take profits, or sit out, not get any new trades, and make some of those important decisions that could help save you money at the big pullback that's coming. The other index is the transportation index. I still put a lot of weight in the transportation index. There's a lot of people that dismiss us now and say it's not a good indicator of the economy. These are all the stocks that basically move us around or move things around. Freight companies, railroads, airlines, trucking companies. If these companies that are, they're the heartbeat of the economy. If they start slowing down and they're not performing as well, it could mean that the economy is slowing down, and we get some of those early warning signs from some of those stocks. Again, that's not perfect either. You don't always see a perfect correlation there between what the transportation stocks are doing. But another one I would add in there as a leading indicator would be the chip stocks as well, at least from the tech side. I use this with the NASDAQ. If I think, it's a NASDAQ, I feel like the NASDAQ could go up or go down, or it was healthy. I'll look at the ETF for the small or for the chip stocks, which is the SMH, Semiconductor Index. And one thing I noticed yesterday was, even though those other indexes were down, the chip stocks were they had been pulling back, and now they were moving higher yesterday. And so, again, that was a little subtle clue that maybe we weren't going to see a major drop just yet. If we would have had the move down yesterday, and the small caps would have had a big move down, then I might have said, boy, that's really bad. The chip stocks are showing that we're probably heading lower, and the other indexes are starting to look having that bearish reversal after opening stronger. So this is one that can kind of give you a little bit of a subtle hint sometimes. Again, it's not perfect. Should never be used alone, but if you're using it with a number of other things that you're analyzing, then it could be helpful at times. And although the chip stocks are up again today, it's not a real strong day momentum-wise, which we'll learn about in the second part of class today. All right, the bonds, we're still in a downtrend on bonds. Let's take out the volume here so we can see the chart a little bit better. We're rallying up a little bit here, but we've seen lower highs and lower lows. Here we kind of had an even low right here, and it looks so far that we're still in this kind of downtrend. It looks like this is now a lower high again. We've moved lower. Now that could change. Although we've moved down the last couple of days, it could pivot right back up and break above this high. And if it does, now you've got a higher high, and you'd have a higher low right there, and it could be possibly reversing trend at that point. But as of right now, I'm assuming that downtrend is still intact until I see it change its behavior, start going to higher highs, higher lows, have higher lows. And so I'm going to assume that bonds are still trending down. Gold, kind of the same thing. It's started to rally up a little bit right through here. We talked about that last week, but then it since has come back down, still giving you a lower high. Now it is rallying back up today, so could it be that maybe that's a higher low right there and it breaks out to a higher high? We'll see. But basically, it's in no man's land right now. It hasn't done either yet, so I'm assuming until it changes, I'm assuming that downtrend is still intact until I start seeing it change its behavior there. Oil keeps going higher. I mean, it amazes me. Again, I still keep feeling like this is just a matter of time before those other countries start cranking up production and flooding the market with more oil, and prices are going to have to come back down. But it's still trending higher, and you can't ignore what it's actually doing. And so Now, I haven't felt the desire to go out there and buy a bunch of oil stocks, but the trend is definitely clear that oil is trending up and trending up pretty strong off of that low there, and we'll see if that continues. The dollar, just the opposite, and this is part of the reason why the commodities have or what probably could be a reason why oil has been rallying too, is with the weaker dollar. There tends to be a correlation, not always, but tends to be a correlation between an inverse relationship between the dollar and commodities. When the dollar is dropping, usually commodities are going up. When the dollar is rising, usually commodities are going down. But definitely a clear downtrend in the dollar, and with it breaking to a lower low today, I'm assuming that downtrend is going to continue, as for now at least. It's confirming that trend still going to a lower low today. And then finally, the VIX. Wasn't too surprising that we had a little bit of a weak market the last few days, besides the rally today, because we had 4 days in a row where the VIX was moving up. It wasn't well yesterday with it closing at the highs of the day. That concerned me quite a bit, because usually, like Friday, the market was down, but we rallied off the lows a little bit going into the close, and the VIX came off the highs a little bit. The VIX closed right at the highs yesterday, and that concerned me a little bit. It was kind of a critical spot there. But like I said, I was kind of mixed, because I was looking at the chip stocks doing okay. The Nasdaq was still looking okay. We'll see, though. Again, I still feel like we're in a spot where we could go either way. So this week is going to be really, the next few days are going to be pretty important for how we finish out December. All right. Let's look at one stock here and then get into the training part of the class. I want to take a look at basic materials sector. We'll go into the hold section right here. And I really like the chart of this GRWG. It's a 99 strength rank. But it's come off a little bit of a pullback right here. And I think I might have pointed this one out last week as well. Some of these I've gone over a couple times, but I still like this one. Had a nice bullish reversal last week right in here. We'll talk about that here in a second when we get into candles. If you switch this over to signals, we're still at a hold, but we're very close to going back to a buy signal here. I think another up day would probably kick that back into a buy signal. But this is one that's been growing pretty fast and moving pretty well lately. All right. Let's get to the trading part of class. And as I mentioned earlier, we're going to talk about candlesticks today. If you look at this little drop-down box on your chart, you can switch between signals. You can look at the short-term trend up or down. You can look at candlesticks. Kind of a weird name to be talking about stock market and what are candlesticks. If you go into your the learning center of the site, if you have access to the learning center, there's some short recordings that get into a little bit of the history of candlesticks. I'm gonna forego that in today's class, just because I want to focus more on application, and you can go back and review the history of that, or you can even Google it too. You can get a little bit of a history if you Google candlestick charts. There's information out there that you can get for free that gives you a little bit of the background. It comes from Japan, and the rice traders of centuries ago used to use this type of um, uh, way to gauge momentum, and that's really what we're going to use it for. Is we're going to be using it to gauge momentum. Now, there's a lot of people, and you might be one of them, that especially if you're brand new to trading, and if you ever really followed the markets, all you did was follow it on the nightly news, right? They'd say the Dow was up 100 points today, or the Dow was down 20 points today, or whatever. And usually the Dow is the big thing that the news stations really focus on, because that's what most people are kind of familiar with. Although when you get into trading and you talk to professional traders, they tend to focus more on the S&P 500. It tends to be more of a broad index. But what that is basically is you've always just focused on the final score. Now, when I start to explain candlesticks, I'd love to use a sports analogy, because that's my background, and that's how I understood. I understood playing athletics that in every sport I played, that there's momentum that can change within a game. And anyone that's ever played sports, if you're out there, you know what I'm talking about. It's not just in sports; it's in other areas as well. But that's where I relate to it. Momentum is kind of a funny thing, because it's really difficult to gauge. I mean, people have come up with mathematical formulas to try to measure momentum, and you can use these mathematical formulas to recognize that momentum is taking place, and you can use mathematical formulas to tell you where momentum could possibly shift. But momentum itself it can't completely be boiled down to a mathematical equation. And that's because there's random events that can factor into momentum shifts. You could have a market that's doing just fine, and and everything's functioning normally, and then have an unexpected event, maybe a terrorist attack or any sort of attack, a country going to war with another country or something like that, or you could have it could be any sort of news. What if we had news that came out that suddenly said that the vaccine doesn't work, or it's killing people? We didn't know that ahead of time. The market's been doing fine, expecting that is going to continue to work, and we're going to get ourselves out of this. But that news item totally changed momentum. Sticking with the sports analogy, right now it's football season. Well, what if your football team drives down to the 5-yard line and they're about to score a touchdown, possibly to win the game, and they fumble the ball and the other team gets it? Well, you just completely changed the momentum of that game. And this happens in the stock market, and but like I said, some of these random events can shift momentum, and that's why you can't perfectly boil it down to a mathematical equation. But you can recognize the changes in momentum. I drive my wife nuts sometimes, because I'll be watching a football game, and this happened recently where my team was up. They were up. I can't remember what the score was, but they were up, and I was just like, I was mad. I was like, we are going to lose this game. I told her right up front. I said, we are going to lose this game. And she's like, what are you talking about? You're winning. She was looking at the score. I was feeling the momentum shift that was taking place, and sure enough, a few minutes later, my team had lost the game. I had recognized that momentum shift. Doesn't always mean that a momentum shift is going to lead to a certain result. I could have been upset that my team was losing momentum, but they could have ended up getting it back and still winning, might have won the game. So momentum is kind of funny, and it can shift. And all we're trying to do with candlesticks is recognize the momentum. Okay. Now, going back to the final score, we could have a final score of 24 to 23. And you're going through your ESPN app and you see that final score, and you say, man, that was a close game. My team barely, this is Team A and Team B, my team barely won that game. Well, that final score may not tell the whole story. What if your team scored 24 points in the first 5 minutes of the game, and then they pulled out all their starters, let all the third string players play because they didn't need them anymore, and the final touchdown that this team scored to make it close was on a Hail Mary 50-yard pass with 2 seconds left, and they got lucky that somebody caught it and they scored those last 7 points. Well, that game wasn't that close. So we can't always gauge what's going on by the final score. Now, in trading, the final score would be at the end of the trading day. Was the stock up or down? Now, what if you saw that Apple was finished the day? I see this happen on CNBC all the time. It drives me nuts because if you know how to read momentum, this will start to drive you crazy when you hear some of the analysts out there. Apple, let's say, finished the day up $3. And you say, oh man, Apple was strong today. Apple was great today, and it was what a great day for Apple. Well, yeah. What if it opened the day up $12, dropped throughout the whole day, dropped heavily throughout the whole day, and ended up barely closing up $3? Well, that tells a different story. That tells me that wasn't a great day for Apple. Apple was not able to hold that big move up. Sellers came in. Sellers drove that price down. They weren't able to finish it off because they ran out of time, but they drove it down to where it was only up $3 by the end of the day. So that's the momentum there was totally shifted. Yeah, I wouldn't be surprised if the next day that Apple was down $5 or something like that after a day like that. But CNBC will talk about how strong a day that Apple had, how they focus on the final score. Now, on the other hand, what if Apple was up $1? And everyone says, oh, well, Apple was okay today. It was only up $1. Not a real strong day for Apple. Well, yeah, what if it had opened down $12 at the open, and buyers came in and they really liked it and they started buying, and they bought it all the way up to where it closed positive at the end of the day, barely closed positive, but it closed positive at the end of the day, and it could have probably gone up higher, but they ran out of time. What are the chances of that stock going up the next day? They're pretty good. Actually, maybe that works better if we say it was down $1. So it's down $1. Oh, Apple had a terrible day today. Really, really a terrible day today. That's not what momentum is telling you. Momentum is telling you, boy, that stock is probably going to go up tomorrow. So learning how to read these little subtle movements and changes can be very important. Now, one thing that I need to point out with candlesticks is that this momentum, like I said, just like with the football game, momentum can be very short-lived. Okay, it doesn't guarantee results. Just because Apple was able to come from 12 down to down 1 by the end of the day doesn't mean that stock is guaranteed to go up the next day. But I will say there's a high probability that will continue the next day. And that's what we're talking about, probabilities. We always talk about probabilities. Now, candlestick, the candlestick itself is, like I said, is very short term. It could tell you what's more likely to happen tomorrow, but it's not necessarily saying that this momentum shift is saying there's a strong probability that Apple will be up tomorrow, but it's not saying that Apple is now going to be in an uptrend for 12 days or whatever. However, what if I combine the chart analysis here? And we're stair-stepping. We just pulled back. We had a day where Apple, on that pullback, the next day here, it opened lower down here, opened down $12, managed to close down $1, but higher. So it closed still lower from the day before, but up from where it opened that day. And you're trending up, and you're having these higher highs and higher lows, all these things we talked about for the last couple of weeks here. That candlestick formation is saying there's a really strong probability that the stock will be up tomorrow. And then I combine that with the trend. The trend is saying that the stock should be up tomorrow too, or should be up probably for the next week or so. It should go to a higher high right here. You see how you can combine the different analysis to say, hey, in the short term, this is what should happen in the short term. The trend is showing me what should happen in the longer term. There's a really good chance that this stock is going to go up. That's all I can ask for as a trader. That's all I'm going to get as a trader. I can't know if that will continue. And like I said, this could go up the next day, and then some bad news can come out. The new iPhone is defective, and this stock could be down here 3 days later. There's always going to be that unknown. I can't affect the unknown. I can't. We can deal with the unknown through our trade management, money management. We'll get into that later on. All right. So when I'm looking at a candle here, and I'm going to zoom into a 3-month chart so we can see in more detail here. So the gray candle is telling me, when you see the gray candle here, it's telling me that the stock opened at the bottom of the candle. We call this is the candle, the main, we call this the body, the candle. There's a couple different terms you could use there. These little extensions that come out are the intraday high and the intraday low. So I know, because this is a gray candle, I know the stock opened down here. This is where it opened. This is the top of the candle. This is where it closed the day. Now, sometime during the day, the stock traded down here and an extreme down here, and at some point during the day, it traded up here. What I assume happened here, what typically happens when you see an update like this and you have these extensions, and these extensions are called wicks. They can also be called shadows. So you can't have a candle without a wick. The weird thing is, though, is usually in a candle, you only have a wick on one side, but here in charting, you can have wicks on both sides, okay? But what probably happened was the stock opened the day down here, probably sold off a little bit, came down to this area right here, and then for some reason, buyers stepped in and pushed the price all the way up, and it probably came all the way up to this extreme up here. And then going into the close of the day, it faded a little bit. Sellers were able to push down, or it could just be that there were lack of buyers. The buyers just weren't there anymore, and it came back down here, and it closed the day right there. Now, what's really important, the most important thing when you're looking at the candle is where did it close in relation to the open? Here, it closed higher than the open. That's a bullish day. That's a good day. Now, the fact that it came off the highs of the day or the lows of the day, this creates a little bit more uncertainty within the move. So this was a very solid up day. Opened down here, closed up here. Closed at opened very near the low of the day. Dropped a little bit. There's a little bit of a wick down here. So after it opened, it had a little bit of a drop. Closed right at the highs of the day, basically. That was a very strong up day. Now you're not going to get many of those. You're going to have these little wicks on both sides for most of the time. But we'll analyze that here. We'll analyze that in a second here of what some of those wicks can mean. Okay. And again, keep in mind that all this analysis is very short term. We're talking just like the next day. And you can see that the stock did open a little bit higher the next day. It didn't end up closing higher, but it did open higher. It did make a move higher off of that strong bullish day right there. Okay. Now the opposite is true with the red candles. These, and what's nice about the software is you know just from colors immediately whether that stock closed. And again, all it's telling you is from the open, okay, not compared to the day before, but just from the open. When it's red, it means it closed lower than where it opened. It opened up here at the top of the rectangle, and it closed down here at the bottom of the rectangle. So it closed lower than where it opened. That is a weak price action. It's usually more bearish. Anytime we close lower than we open, it means the sellers won that day. Okay. When it closed higher than where it opened, the buyers won that day. All right. Now, some days you'll see a move like this, where we basically opened and closed at the same spot. So we opened the day. At some point during the day, I don't know what happened first, but at some point during the day, we traded down to this low right here. We got up to this high up here, and then we closed right where we opened. That's basically a tie right there. There's a name for this. It's called a doji. There's a lot of Japanese names for these formations, which would make sense because that's where it came from. But that's what's called a doji. A doji is basically indecision. It's telling you that it was a tie. Nobody won that day. So you got to be careful if you're trading and the day ends up in a tie. Well, that could tell you a momentum shift might be underway. If you see what happened here is you had a down day, a down day, a down day, a little bit of an up day right here, but it was basically in the same area as the day before, just kind of moved back here, it moved down, here it moved right back up. It really didn't go anywhere. And then you've been basically trending down right here, and then you have an indecision day right here. Sometimes I can tell you that maybe momentum is about to shift. Now you got to be careful. You always need confirmation from a doji. You don't want to just say, "Oh, we've been trending down. There's a doji. Stock's going to turn around, and go up." No, it's just pausing. It's saying, "I don't know which way I'm going." Sometimes you'll get a doji, and then it'll keep going in the same direction. So here we were moving up. Now this isn't quite a doji, but look at the body. It basically opened about where it closed, had an intraday high up here, an intraday low right here. That was an indecision day. And you've already moved up. You might say, if you're not careful, you might say, "Oh, well, that thing's going to go down now because that was an indecision day." Well, no, it didn't. It was just a pause. Maybe something else came out and news came out and that thing continued to move higher. Now, was that still important? I think it's important. Indecision days are important because sometimes they can be an early warning. The stock was moving up pretty healthy, and then it had a very tight trading range right there. Indecision day. It didn't end up dropping immediately off that, but look what happened. A couple days later, then it dropped down a little bit. It might be warning you that the stock is now questioning whether it wants to go higher. And again, I don't even know why it's questioning. I don't need to go find out why, because their traders are telling me, based on their buying and selling, that they're not quite sure if that trend is going to continue. And if you start to see that warning sign after stock's been moving up for quite a while, that could be a warning sign that you might be getting close to a pullback of some sort. Now, if you're a longer term trader, you're not too worried. You're going to get these all the time. You're not going to be jumping out of a stock just because the momentum looks like it could be slowing down a little bit. But if you're maybe you start tightening up a trailing stop or something like that when you start seeing that type of behavior. And remember, this is very short term. you get a pause, and maybe maybe it takes off and it keeps going for several more weeks. One of my favorite ways to use candles, though, for reversals, one of my favorite ways to signal reversals, though, are let's go to the let's go to QQQ. One of my favorite bearish reversals. Now, this is effective when you get a nice run up into the stock. I like to have a nice run up. We did back here. And then what happened on this day right here, and this is one of those that you have to kind of learn to recognize it. I used to call these black candles because on the charting service I used, whenever it made this price action, the candle would be all black. And so I could recognize it immediately that was very bearish. But what happened here is the stock opened up here. Here's where it opened. Here's where it closed. Here's where it closed the day before. Now, the reason why you get on the top of the chart, the reason why you get this up here is this is telling you whether you're up or down based on the close of the day before. So right now, the QQQ is up $2.03 higher than where it closed yesterday. And we can see that on the chart right here. Here's where it closed yesterday. Here's where it's trading right now. It's $3 higher from where it's trading right now. But where is it trading in relation to where it opened this morning? It's basically right where it opened this morning. It hasn't really gone anywhere. And that's going to be important. So we go back here. This was actually closed higher. The close right down here was actually higher than the day before. So it was showing that the QQQ was up. It's positive, up from the day before. We'll say it was up $1 or something just to give it a dollar amount. But that didn't tell the whole story. Here's where it opened. It opened like up $3 and then closed only up $1. So the sellers were actually in control this day. They drove the price down, and they probably could have drove it lower, but they ran out of time. Whenever you see that price action where you close lower for the day, but still higher than the day before, I'll say that again. Whenever you close lower for the day, but still higher compared to the day before, and you've had a run up ahead of time into that stock, that's a very bearish price action. Now, that price action, like 90% of the time, you're going to get some sort of a drop the next day. It doesn't necessarily mean the stock's going to fall apart. Like I said, candles are very short term. But if there's other factors that you're calculating, what if the stock, what if you're in a downtrend and you have lower highs and lower lows, and you have a rally for a few days right here, and then you get this formation where it opened higher and closed lower for the day, but still higher than the day before, and you're in this downtrend right here. I could come to the conclusion that this next downward move is probably about to start. The shorter term is telling me we should drop the next day. The trend is saying we probably should be trending lower. And again, from a probability standpoint, there's a good chance that we're starting another move lower. When you're in a hyper bullish environment, which we're in right now, though, that doesn't necessarily work all the time. If you go back a few days earlier, we had that exact price action right here. We closed lower than where we opened, but still higher than the day before. And yet it shook it off and went up for a few more days. Now, that could have been an early warning sign of that this was about to come, that your momentum is starting to weaken, and it is definitely something you got to pay attention to, because the sellers are gaining strength at that point. It's not showing up yet necessarily on the on the price because you still closed higher than the day before, but it's a warning sign. Now the opposite is true. What if we've been going down, 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 and we gap low? We open down here at the end of the day or at the beginning of the day, and we start rallying back up. So we open down here and we close down here. This is a bullish reversal. What it's going to show you on the price up here, which I don't know what scroll down on that. See, it'll show that the stock was down $1 for the day or something like that. But it doesn't tell the whole story because this thing might have opened down $3. And buyers pushed the price back up, closed it higher than the open, but still lower than the day before. In many cases, when you see that, you're going to get a reversal. It's going to start moving back up. Now, again, this is very short term. Maybe that reversal is only going to, the candle is only telling you that maybe that reversal is going to, it should open higher the next day. But if you combine that with a stock that's stair-stepping up, and on this pullback right here, it gapped down, closed higher than where it opened, but still lower than the day before. It could be telling you that not only tomorrow should this thing start moving up, but the trend is saying that trend should start to go up for the next few days or something. That's a great signal to buy. That's about the best I can do as far as probabilities to get into a stock that's more likely, or get into a trend that's more likely to go up. Now, what are we seeing on the QQQ recently? Well, look what happened yesterday. So we opened higher. Here's where we opened. We did end up closing higher too. So we were up for the day and we were up from the day before, but we were all the way up here. We had the intraday high up here. Sellers were able to push things down going into the close, push it almost all the way back down. That's a very weak close when I see that. Now, you could say the opposite is true today. We're basically going to close about where we opened. It dipped down a little bit. Now, it dipped down, but it was still higher than where it closed yesterday. So at no point today did we see the QQQ down for the day, but it did show some weakness. Now buyers were able to push it back up. So we're getting a lot of conflicting signals right in here. Sellers were able to push things down here. Buyers were able to push things back up here. What conclusion would I draw off of the last 2 days? I'd say there's a battle going on right now, and I don't know who's going to win. There's turnovers all over the place on this football field. You know, one guy fumbles the ball, and then the next team gets the ball, and then they throw an interception, and momentum is shifting back and forth. So what did I tell you in the update to look for? I said, well, you know, we're not getting a lot of signals right here of how this week may go. We need to look for a breakout above here or a breakdown below here. If we break out above here, we'll probably see momentum pick up and see more of these more solid candles forming, showing a stronger uptrend. If we break down below here, we're probably going to see more of this where we're dropping. And look at the way this drops. So we had a big solid down day right here. And what you had? You had 4 days of indecision, back and forth. And then now, what did we learn? Was it last week or the week before? We learned about whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. So you had this indecision, but you had the trend moving down beforehand. The higher probability was that it was going to continue to move down once the sideways indecision was done. And sure enough, it did continue to move down. What did this day tell us right here? Well, we closed slightly higher than where we opened. How do I know that? Because it's gray. Candle is gray right here. Had a wick or shadow that came all the way down here. So the sellers pushed this thing down early in the day, probably. And then the buyers, hey, were buying the dip, pushed it right back up, closed it higher than where it opened. and it gave it enough momentum to keep going. Same thing kind of happened right here. I'm running out of time here, but let's quickly here look at GRWG. So we had this little pullback right here. And this day right here, here's where we closed the day before right here. Here's where we opened. So we opened lower, we were down, and the buyers came in immediately, pushed the price all the way up, closed it near the high of the day, or at the high of the day, basically. Now, this is what we call a bullish engulfing pattern because it completely engulfed the bearish candle from the day before. Completely reversed it. The entire day was contained within the candle from this day right here. So it was dropping down, down, down. Bullish engulfing patterns and bearish engulfing patterns used to always work. I mean, they were, there's more and more people have learned to recognize that pattern. It hasn't been as reliable, and I don't trade them just on that on that price action alone. I usually wait for a little bit of confirmation. As you can see, it paused a couple of days right here, but now it's taken off again. So we've got a little bit of a pause right here. But that was the bullish reversal. So you have the pullback. Here was a reversal day saying this stock should start to go back up. And so far, it's working. It's doing that. How can that help me then? Well, could I have had a more precise entry or more aggressive entry into the trade if I saw the pullback right here and I'm expecting this trend to continue? I have a bullish reversal after this pullback. So I decided to go ahead and buy right here. I might have made an extra $3 or so by the time that thing goes to a buy signal. You might decide to wait for the buy signal. Ooh, it looks like we're getting the buy signal. It did go up far enough to get that buy signal. That just barely changed on us there. But you know, so there's different. You could use it as a more aggressive entry technique or a stop loss technique. Maybe you get into the trade and you know, you get a real strong bearish candle. You know, you get the real strong bearish. What if you get a real strong bearish day where it closes at the lows of the day? Well, you get a move like that on very high volume. I know that's I've tried to color that in red, but it looks like a bunch of scribble there. But that's supposed to be one of these red candles. Big red candle right there. This thing's probably not going higher, and I might want to get out now and save myself from a big loss. You know, here's a big down day right here, and it did move a little bit lower the next day. Again, these are very short term, but I can combine it with some of the larger trends. Combine it with that stair-step analysis, and you can find good entry and exit points and warning signs and things like that, being able to gauge that momentum. All right, we'll talk more about this as we see these candles on some of these different stocks that we're looking at. And there's other types of price action there that and other names of these different formations I can go over when I see them. But that's the basics. You get the basics down like that, and you get that strong bullish and bearish reversal I went over today, where again, if it gaps up and closes lower than where it opens, but still higher than the day before, that's a pretty bearish price action that day. Good chance you're going to at least open lower the next day. And the bullish one, if it gaps lower and closes higher than where it opened, but still lower than the day before, that's usually a pretty strong bullish reversal. Okay. All right. Thanks, Joanne. Hopefully this was helpful. We'll see you Thursday for the next market or for the stock specific class and the next training. Thanks. Bye now.